Stop overpaying on taxes. Here are the top 10 business write-offs that could save your company a fortune. Number one of the top 10, let's not even call it write-offs anymore. Let's call it tax strategy. I think write-off versus tax strategy are two different things. So number one, salaries and benefits. These can often be the most significant costs for a business. So the ability to deduct them can result in a substantial tax savings. Salaries, benefits, and even vacation time paid to employees are generally tax deductible as long as they meet a few criteria. Number one, the employee is not the sole prop, a partner, or an LLC member. The salary is reasonable, ordinary, and necessary. Last but not least, the services were actually provided. So listen, you got a tax strategy team around you. They're going to be able to help you with all this stuff. Just be careful going to a cookie-cutter accountant that's just going to focus on a write-off. Number two, rent payments. If your business operates from a rented or owned property, you could deduct the rental payments as a business expense. Rent paid on your home should not be deducted as a business expense, even if you have a home office. That rent can be deducted as part of the home office expense. So these are nuances. Accounting versus tax strategies. I'm going to keep talking about it. You want to make sure that as you step into more and more financial freedom and success as a W-2 employee and as a business owner, you could really I dot and T cross in the space, and you need the right professionals to help you be able to do that. Number three, depreciation. When you purchase furniture, equipment, and other business assets, depreciation rules require you to spread the cost of those assets over the years you'll use them rather than deducting the full cost in one single hit. The IRS gives you business owners several ways to write off the full cost in 1 year. Number one, de minimis safe harbor election. Small businesses can elect to expense assets that cost less than $2,500 per item in the year they're purchased. Number two, Section 179 deduction. This Section 179 deduction allows business owners to deduct up to, write this down, $1,160,000 of property placed in service during the tax year as of 2024. This includes new and used business property and off-the-shelf software. The Section 179 deduction is limited to the business's taxable income, so claiming it cannot create a net loss on your return. However, any unused Section 179 deduction can be carried forward and deducted over next year's return. That's important. These little distinctions are the difference between good and great and adding zeros to your income and putting money back in your pocket where it belongs. Last but not least, folks, bonus depreciation. Businesses can take advantage of this to deduct 100% of the cost of machinery, equipment, computers, appliances, and furniture. So remember, once again, a lot of nuanced stuff here, a lot of language, a lot of things that you may not be able to understand. Get the right team and they can show you how to do it. Number four would be legal and professional fees. Legal and professional fees that are necessary and directly related to running your business are deductible. These include fees charged by lawyers, accountants, bookkeepers, tax preparers, and online bookkeeping services. Remember, if your business starts to take off and your operating agreement doesn't speak a specific language, it's in these moments that you can get yourself jammed up. So you got to make sure that your lawyers are talking to your accountants, who are talking to the bookkeeper, the tax preparers, so your operating agreement speaks a very specific language for the business to prosper. Number five, advertising and marketing. The cost of advertising and promotion is 100% deductible. This can include things like, number one, hiring someone to design a business logo, Parker. The cost of printing business cards or brochures, Parker. Purchasing ad space in print or online media, maybe Parker. Sending cards to clients, Parker. Launching a new website, Parker. Running a social media marketing campaign, Parker and Danny and Alexa. Sponsoring an event, Alexa. When you do stuff like this as part of the overall game plan that's going to drive traffic to you, it becomes an advantage from a tax perspective to put money back in your pocket where it belongs. Number six, education. Education costs are fully deductible when they add value to the business and increase your expertise. In order to decide if your class or workshop qualifies, the IRS will look at whether the expense maintains or improves skills that are required in your current business. The following are examples of valid business education expenses. Number one, seminars and webinars. That's a biggie. Two, books tailored to your industry. And last but not least, subscriptions to trade or professional publications. Listen, this is when you get a team around you that can say, yeah, do that. That's where you get the advantage. But be careful. Don't do this over here. Once again, communication at the highest level, back to that operating agreement, creates a lot of fluidity going forward. Number 7, travel expenses. For a trip to qualify as a business travel, it has to be ordinary, necessary, and away from your tax home. Your tax home is the entire city or area in which you conduct business, regardless whether you live there or not. You need to travel away from your tax home for longer than a normal day's work, requiring you to sleep or rest en route. So, for example, if I fly out to Utah and I speak in front of a bunch of people and we're able to give education on what to do as far as having the right hand speak to the left hand, and then all of a sudden that education results in us having a meeting, well, guess what? Traveling there, traveling back, that's part of the travel expense. Number 8 is interest. If you take out a loan or use a credit card to cover business expenses, you could deduct the interest paid to your lender or credit card company as long as you meet the following requirements. Number 1, you're legally liable for the debt. For example, if your parents take out a second mortgage on their home to help you start a business, you're not legally liable for that debt. In that case, interest on the loan is not deductible for you, even if you make all the payments on the mortgage. Number 2, both you and the lender intend for the debt to be repaid. A loan that doesn't have to be repaid is a gift. Very important. Last but not least, you and the lender have a true debtor-creditor relationship. The IRS tends to scrutinize loans between related parties, such as family members. You want to be able to paper that up the right way and make sure that a lawyer blesses it. Number 9, contract labor. If you hire freelancers or independent contractors to help you in your business, you could deduct their fees as a business expense. Remember, if you pay a contractor $600 or more during that tax year, you're required to send them a Form 1099-NEC by January 31st of the following year. Once again, folks, this is important. Like all the people right here that are doing the videos, these are independent contractors, and it's very important for the business. Number 10, business insurance. You could deduct the premiums you pay for business insurance. These may include, number 1, property coverage for your furniture, equipment, and buildings. Number 2, liability coverage. Number 3, group health, dental, and vision insurance for employees. Workman's compensation coverage. Next, life insurance that covers employees as long as the business or business owner is not a beneficiary on that policy. Very important distinction there. Last but not least, professional liability or malpractice insurance. So all this insurance not only protects the business, but it does give you those tax advantages. Don't let write-offs fall through the cracks. Use our Epic Wealth Builder. It's a software that allows all of your financial institutions aggregated to be on one landing page so you can see your financial world real-time at the click of a button. Go ahead, click the link below. One of the folks here at Epic is going to take you through that success process, help you put all of this stuff on that personal financial website so your decision making is clear. Remember, we're not accountants and there is no obligation for you to pay for anything. We're providing value and education along the way. Thanks for checking us out.